Most people think the best real estate investments require large amounts of capital. I'm here to challenge that myth and show you how to win big with less money at tax defaulted auctions. Utah auctions are held once a year. Many investors will miss this opportunity because they don't take action. Stay till the end of the video and you'll learn how to secure properties at a fraction of their market value. With real estate prices skyrocketing, now is the time to seize opportunities in the tax defaulted property business before everyone else catches on. Now, Utah is a large state in terms of land mass. However, the population is less than 4 million residents. And the majority of those people, they make their home along the Wasatch Mountain Range, which runs north and south through the state. Utah tax defaulted auctions take place after the 5th year of delinquency. If you're new to the tax defaulted property business, this is a very long wait, and the state is very benevolent, allowing people to wait and be in tax default for 5 years. The Utah State Legislature requires all property owners to pay property tax in full annually. If the property owner defaults on the taxes, the treasurer is mandated by the state legislature to put the property in default. As I just mentioned, that property can remain in tax default for as long as 5 years. At that point in time, the state of Utah will require the official county treasurer to give notice of default. Thereafter, they'll lien the property, ultimately levy on the property. At that point, they'll confiscate the property and sell the property at a public auction and earn enough revenue to pay for the defaulted taxes. There's no right of redemption for the property. The tax defaulted property auction is final, and the county will transfer ownership from the county to the new owner via a treasurer's deed. The legislature will authorize the county treasurer to wipe out, that is, extinguish or delete the deed of trust loan. That does not mean the municipal or federal government liens have been cleared from the property. The county government conducts tax defaulted property auctions to collect revenue by selling the property and using the funds to pay delinquent taxes. This auction is as is, and in my words, buyer beware. This all means the county is not passing any judgment regarding the property condition, and there is no warranty regarding the title. Every tax defaulted property is different. These properties are used and abused and not pristine and new. In some instances, a Band-Aid isn't going to work to fix it up, and you'll need to do some life-saving surgery. From my experience, deeds that I've noticed from my research, the effect on that deed, the narrative means that the writing is telling you it's a quit-claim deed, and it might have a different name. However, it's a quit-claim deed, and that simply means the county is taking no responsibility for the condition of the property, and the county takes no responsibility for defects in the title. I'm not an attorney at law or a financial advisor or a real estate broker. These are all good questions to ask an attorney and get new answers. Why are we doing this? What attracts investors? I come from the practical world. If you're buying real estate from the county or a municipality for 10, 20, or 30 cents on the dollar, and you have evaluated the property and you're purchasing and have a large margin between the low auction price and your possible sales price or hope for exit price, tax lien certificate and tax deed purchasing makes sense. I didn't say it was risk-free. If you're looking for a decent return on your savings or your nest egg, there aren't many traditional ways to do that in the economy we live in today. I'm not a pessimist, but I'm not about to sugarcoat what is really going on. This isn't going to be traditional, conventional investment advice from here on forward. You need to think differently and control your own future and your destiny. Don't kid yourself. If you think you're going to make big money that you need in the future, you need to follow a specific system of some kind. In my opinion, it's not going to happen at the local bank with a savings account or the stock exchange or with mutual funds. That does not mean you're doomed and in for a life of despair and scratching for crumbs. There are many opportunities when you open your eyes. The secret to success is focus and concentration. These words are easy to say and to write. To accomplish the success you want and deserve, you must focus, and I can assure you, you'll be alone in your pursuit of success. Unless you have a coach, don't expect any help. I subscribe, and you probably should, to the 80-20 rule. Only 20% of the people who start will be successful, and out of that 20% that are successful, 80% of those successful will fail in the next 5 years. That boils down to 4% of the group that started really succeed in a big-time way in life. Don't kid yourself. Clients, buyers still have money to buy the things they want and desire. It's not the economy. Experience has taught me inflation, slow economies are tough times. These are just excuses. For sure, it's not the product. Let me peel back the onion a little bit. People buy what they want and what they desire. Inflation and bad markets and tough times are all just excuses. People buy what they want and they find the money. Burn that on your brain and you'll make a lot more sales. At the time this video is being recorded, real estate market has experienced massive increases, in some cases 15 to 30%. Tax defaulted real estate is generally used and abused. I'm not referring to useless junk. Junk is always junk. Entrepreneurs who have skills with their hands and knowledge of how to repair and knowledge of how to market properties do very well in this business. I'm referring to real estate that has overgrown trees, needs paint, needs cleanup, not properties that require major repairs. Inflation has accelerated the value of the average homes to a price where the median home in the United States is $400,000. It takes over $100,000 in income to qualify for that loan. According to the Census Bureau, the average homeowner makes $70,000 a year. They don't qualify for a $400,000 loan. This is an opportunity to sell used and abused properties. Starting prices at tax defaulted property auctions are generally the back delinquent past due taxes. Many properties are sold with auction prices of 60%, 70%, 80% below the tax assessed value. You'll probably not get rich on one transaction. However, long term, this is a worthwhile side hustle. We can teach you the process and guide you towards profits of $25,000 and $50,000 on one deal. I'm Ted Thomas. I've been guiding and teaching others in this hidden market for decades. This business works for those who are educated. However, don't quit your job. This is a part-time side hustle. If you learned a lot today and you want to dive in deeper, click the link in the description below for my free gift to you.